The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, Asian fixed income has had a good year in 2024, performing significantly better than its global peers over the first 6 months of 2024. Now, while there are risks of a potential rise in geopolitical tensions and shifts in monetary policy this year, Asia's credit market may pose a range of opportunities. So what are they, and what should investors be looking out for? Well, to find out more, joining me now is Omar Slim, who is the co-head of Asia of Fixed Income at PineBridge Investments. Omar, welcome to the show.
Good to be with you.
All right, Omar, despite a potential rise in geopolitical and monetary policy risks this year, are there any opportunities in Asia's credit markets that investors can benefit in the form of higher returns and lower volatility?
So Asia fixed income in US dollar has been a segment of the market which has exhibited pretty good returns over the past few years, with a lower volatility than some of its peers, including, for instance, the U.S. investment grade market, investment grade being the highest credit quality in the market. So I think one of the interesting factors about that market is that it tends to have a lower volatility, and that's not something new. This is something that has manifested itself over the past few years, including last year when, as you said in your introductory comments, that the market had a significantly better year than some of its peers. And we think it's driven by factors that will persist this year. I think the fact that the yield levels, from a historical perspective, are a bit high or relatively higher, we think this is an interesting market, given the fact that the yields are relatively attractive and the credit quality is quite high with a lower volatility. So all in, that market, we think, will continue to be pretty well anchored.
I see. Well, elections and central bank actions have dominated global markets over the past year. So what are some key themes to watch out for this year, and how will they impact Asia's credit markets?
Oh, yeah, you're quite right. Last year, I think more than half of the global population witnessed some kind of election. I think this year is a bit different. I think this year there's a few things to watch. The first is the monetary policy and inflation expectations, and that is really continues from what we have been seeing for the past few years, not only last year. And there, I think, while inflation can be a bit stickier in some markets, I think inflation is trending in the right direction. As such, we think that monetary policy will continue to be increasingly accommodative, including in the U.S. The other part, which is obviously top of mind for a lot of investors, is the fact that there's a new U.S. administration coming, and that U.S. administration can be focused on some policies that are more protectionist in terms of imposing tariffs, particularly in terms of some Asian countries, specifically China. So that is bringing up some policy risk. This is something that we've been focusing on as well. The Asia fixed income market generally is more insulated just because there are less issuers that are exposed to the U.S. market. But it's definitely a driver which will be bringing in quite a bit of headlines.
I see. Well, speaking of some of these key themes, how might Trump's new administration impact Asia credit markets? Will it have a great impact on Asian USD corporate bonds?
I think it will have some, but not much. The reason why it's not much is because simply the fact that there isn't a lot of companies and issuers out of Asia that have exposure to the U.S. Most of them tend to be either domestically focused or regionally focused. There are some, for instance, that are, like automakers that are exposed to the U.S. market, Korean automakers, Japanese automakers, and so on. And these can be subjected to some tariffs. However, we think that there will be some mitigating factors even for those names, because quite a few of them do have manufacturing capacity in the U.S. itself. So they could be able to try to avoid some of those tariffs since the manufacturing is done locally. There are other issuers that are exposed to the U.S., and frankly, with those, we are being a bit more cautious in terms of being quite defensive when it comes to owning or rather not owning these issuers.
Okay. So overall, Omar, what's your outlook like for Asia's credit market this year?
I think the Asia credit market will continue to be rather steady. I think the fact that the yield levels are where they are provides some interesting carry I think spreads are tight, and as such, I think there's limited room for spreads to tighten further. I think they probably remain stable, but I think the yield levels will provide some carry. So I'm expecting that market to remain well anchored and to produce a steady carry, which can be a building block for investors.
I see. Well, also taking a closer look at asset classes here, will Asia investment grade remain as an attractive asset class compared to developed market investment grade?
I think it has its attractiveness, yes, because of the fact that it's very well supported technically, and because of it has a lower sensitivity to interest rates, and it's the fundamentals of the issuers continues to be generally good. This is something that I've said on your show as well last year. And indeed, what happened last year is that the Asia IG market outperformed its global peers by substantial margin, actually.
Right.
So I would say this year will be another year where Asia IG should produce steady performance. There are some risks, of course. You mentioned geopolitics, and you mentioned other risks. But generally, I think this is an asset class that's pretty well supported.
I see. Well, Omar, how might an Asia investment grade's low correlation to global portfolios kind of help reduce one's overall portfolio volatility then?
Yeah, well, we have done some studies, actually, and what we have seen is that adding Asia IG to global portfolios does indeed help with bringing the overall correlation of the portfolios lower. So we're not saying that Asia IG should take over the portfolios, particularly on the institution side, but what we're saying is that Asia IG can provide an interesting diversifier, particularly when one is looking at the global allocation.
I see. Well, Omar, meanwhile, the Asia high yield market delivered strong performance in 2024 with a total return of 15.85% for the JP Morgan Asia non-investment grade index through November. Can we expect a stronger performance in 2025 as well? What kind of opportunities do you expect Asia high yield to bring this year?
Yeah, 2024 was really the year of comeback for Asia high yield. It has had a few very challenging years before that, so the market did come back in 2024 in a major way.
I see.
I would say that perhaps performance will be. I think it's difficult to expect the same kind of level of performance because 2024 was exceptionally strong. But I do think that there are still some value in Asia high yield. Asia high yield is a very different market in the sense the interesting feature about it is that it has a lot of idiosyncratic names and opportunities that are interesting, but they have been kind of battered by the fact that the overall market has been going through a lot of negative headlines and a lot of changes. So I think it's kind of a case of finding value in the market. And we continue to think that there are some issuers that provide value, including, for instance, India Renewables, as well as some of the Indonesian names and even some of the Chinese names.
I see. Well, given these expectations, before we let you go here, Omar, how might investors go about managing Asia credit to their global portfolios? What risks should they also consider?
I think there is a place for Asia IG in portfolios. Obviously, it's up to the investors to see what that place is or could be. I think that Asia IG is a building block, is an important diversifier, particularly to reduce volatility of the overall portfolio. Asia high yield, I think, obviously has a higher risk profile, but we do continue to think that there are some opportunities in that market, particularly at an idiosyncratic level. And I think the fact that this is the US dollar bond market, with the US dollar being relatively strong, does provide a kind of insulation from the local currency volatility.
I see. Well, thank you so much, Omar, for joining me today with your time and your insights.
Thank you.
Thank you so much. That was Omar Slim, who's a co-head of Asia Fixed Income at PineBridge Investments. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.